Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 28th, 2025, and we're diving into the first quarter earnings report of Alliance Resource Partners. Joining us is John, senior analyst from Smart Stock Watch. John, can you give us a brief introduction to Alliance Resource Partners and the highlights of their latest earnings report?
Thank you. Alliance Resource Partners is a major player in the coal industry, being the second largest coal producer in the eastern United States. Their Q1 2025 earnings report shows a total revenue of $545 million, a net income of $74 million, and an adjusted EBITDA of $159.9 million. They've also declared a quarterly cash distribution of 70 cents per unit and updated their 2025 guidance.
Revenue and profitability overview. Let's start with the top line. Alliance Resource Partners reported a total revenue of $540.5 million for the first quarter of 2025, which is a 17.1% decrease compared to the same quarter last year. John, what factors contributed to this decline?
The decrease in revenue is primarily due to reduced coal sales volumes and prices, as well as lower transportation revenues. Despite these challenges, the company managed to achieve a net income of $74 million thanks to higher oil and gas royalty revenues and improved cost efficiencies in their coal operations.
That's interesting. How did these factors impact their profitability?
While the revenue declined, the adjusted EBITDA was $159.9 million, indicating a strong operational performance. The company benefited from lower operating expenses and improved per-ton costs at their coal operations, which helped offset the revenue decline.
EPS forecast and analyst expectations. Now let's talk about earnings per share. Alliance Resource Partners reported an EPS of 57 cents, which fell short of the analyst's forecast of 63 cents. John, what does this EPS miss mean for the company?
The EPS miss of 06 cents indicates that the company faced more challenges than anticipated, particularly in terms of revenue generation. However, it's important to note that the company has been proactive in managing costs and securing future contract commitments, which could stabilize earnings in the upcoming quarters.
How many analysts were involved in this forecast?
There were 3 analysts who provided the EPS forecast. The miss suggests that while the company is facing short-term challenges, their strategic initiatives could potentially lead to better performance in the future.
Operational efficiencies and future outlook. Moving on to operational efficiencies and future outlook, Alliance Resource Partners has added 17.7 million tons of contract commitments over the 2025-2028 period. John, how does this position the company for the future?
This is a significant development. With over 96% of their 2025 coal sales volumes committed and priced, the company has a strong foundation for future revenue. Additionally, the quarterly cash distribution of 70 cents per unit reflects their commitment to returning value to shareholders.
What can we expect from their updated 2025 guidance?
The company expects improved mining conditions and cost efficiencies, particularly in the Illinois Basin and Appalachia. They are also anticipating increased domestic sales due to higher electricity demand, which should support their financial performance throughout the year.
CEO commentary and strategic initiatives. Let's discuss the CEO's commentary. Joseph W. Kraft III, the chairman, president, and CEO, mentioned cost improvements and strong contracting activity. John, what are the key takeaways from his statements?
Mr. Kraft highlighted the company's focus on cost improvements, particularly in the Illinois Basin, and the strong contracting activity that secured 17.7 million tons of commitments. He also noted the increasing energy demand driven by higher natural gas prices and electricity demand forecasts, which positions Alliance Resource Partners as a critical supplier in the energy market.
How does the recent policy announcement by the administration impact the company?
The administration's support for coal-fired generation is likely to extend the operating lives of several facilities, which could benefit Alliance Resource Partners by ensuring a stable demand for their coal products. This policy momentum supports the company's long-term fundamentals.
Key takeaways. As we wrap up, Alliance Resource Partners has shown resilience in a challenging market environment. Despite a revenue decline and an EPS miss, the company has secured significant contract commitments and is well-positioned for future growth. John, any final thoughts on their investment prospects?
Alliance Resource Partners is navigating a complex market with strategic initiatives that could yield positive results in the long term. Investors should keep an eye on their cost management and contracting activities as key indicators of future performance.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Alliance Resource Partners' performance in the comments below.